When you look at the world of electric vehicles, NIO is a real puzzle. I mean, on one hand, you've got a company with this massive physical footprint, and on the other, a stock price that's been, well, all over the map. So, what is really going on here? Let's get into it. So, the big question that our source material really digs into is what's behind all this chaos? Is this just your typical market volatility, or is there a story hiding underneath the surface? Well, according to the analysis we're looking at today, it's definitely the second one. And here's their main point, laid out as plainly as possible. The argument is that there's a deliberate campaign happening right now, a campaign designed to create fear and scare regular investors, people like us, into selling their shares. Which brings us to our first section. The source doesn't see this as just random market noise. No, they frame it as a high-stakes poker game where the entire goal is to bluff you and make you fold a winning hand. So what exactly is a shakeout? Well, it's a playbook, a deliberate strategy. The whole point is to create enough fear and uncertainty that it triggers an emotional reaction, panic selling, from individual investors, even if the company's fundamentals are actually solid. So here's how that playbook allegedly works, step by step. First, short sellers. These are investors who are betting the stock will fall. They create fear. That fear causes people to panic and sell their shares. That flood of selling pushes the price way down, which then lets those same short sellers swoop in, buy the shares they need for super cheap, and close out their risky bets for a big profit. And listen, this is the most crucial part of the whole argument. When an individual investor panic sells, they're not just locking in a loss for themselves. They're basically handing a victory. And the cheap shares, right over to the other side of the trade. That selling is exactly what the shorts need. Okay, so that's a pretty bold claim, right? So where's the proof? The source argues that if this is really an orchestrated battle, then the clues, they ought to be hiding in plain sight, right there on the stock chart. So let's put on our detective hats and dig into the data. All right, our first clue is a little thing called VWAP. Now, don't let the acronym scare you. It's not just some simple average price. It's the average price weighted by how many shares were traded at every single price point. You can think of it as the market's true center of gravity for the day. It shows you where the real money was actually doing business. So for the specific day that the source was analyzing, the VWAP was $4.89, and that number is incredibly important. It was the price where the most shares changed hands. It was, for all intents and purposes, the market's line in the sand for that day. Now, the next clue is the Money Flow Index, or MFI. The source calls this the smart money indicator. Why? Because it doesn't just look at price. It looks at price and volume to see where the real buying and selling pressure is. It's asking a simple question, is the big institutional money flowing into the stock, or is it heading for the exits? And the MFI reading was super high, up at 71.62. Now, a lot of people might look at that and say, oh, this stock is overbought. But the source has a totally different interpretation. They call it hidden accumulation. The idea is that even though the price isn't shooting up, a huge amount of money is quietly flowing into the stock. It suggests big players are secretly buying up all the shares that the panic sellers are dropping. So this chart kind of lays it all out. These are the short-term battle lines. You've got that critical support right there around the VWAP at 489. If the price falls below that, that's not good. But if the buyers can just push past that resistance at 493, it opens up a clear runway to that really important psychological level of $5. Okay, so we have been way down in the weeds looking at the daily charts. It's really easy to get tunnel vision there. So now let's pull the camera all the way back, way back, and look at the fundamental long-term argument, the thing the source calls NIO's concrete moat. And this is the absolute core of the entire long-term idea. The source is adamant about this. To really get NIO, you have to stop thinking of it as just another car company. You have to see it for what they argue it is, an energy and infrastructure company that just so happens to make amazing cars. And the scale of this infrastructure, it's just wild. We're talking more than 3,600 physical power swap stations already built in the ground. And these aren't just glorified charging plugs. These are fully robotic stations that can swap out a depleted battery for a fully charged one in less than 5 minutes. I think this quote from the source just says it all. This huge network isn't some idea for the future. It's not a promise on a slide deck. It's real. It's steel and concrete that exists right now. And that physical network is NIO's true competitive advantage. It's moat, and it's something that would be incredibly difficult and expensive for any competitor to copy. So you have this giant moat of steel and concrete. How does that unlock the company's future? Well, this leads us to what the source calls the absolute masterstroke of NIO's entire business model, the plan to become the gas station of the future. And it all comes down to this idea called BaaS, which stands for Battery as a Service. Here's the deal. Instead of buying the single most expensive part of the car, the battery, you just subscribe to it. And this one little shift is designed to solve the two biggest fears people have about buying an EV. You can really see the genius of it here. With a normal EV, you're always worried about the battery getting old and losing its range, and you're worried about new battery tech making your car obsolete. But with the BaaS model, you never worry about battery health because you can always swap for a fresh one. And if some new amazing battery technology comes out, great, you can upgrade to it on your very next swap. It completely removes that fear of being left behind. But this is where the plan goes from smart to, well, kinda brilliant. NIO is opening its swap network to its competitors. They're already signing deals with other big car makers. By doing this, they're turning their biggest expense, all those stations, into a machine that generates recurring revenue. The ultimate goal isn't just to service NIO cars, it's to become the standard, the default gas station for everyone. So when you put it all together, the alleged shakeout on the charts, the data underneath, and this huge concrete moat, you get to the source's final verdict. And it all really just boils down to a battle between two different mindsets: patience versus panic. The source brings up this famous quote because it perfectly captures their view of what's happening. They don't see all this volatility as a sign of weakness in the company. They see it as this exact device in action, transferring shares from the impatient people who are panicking to the patient people who are in it for the long haul. So the final message from this analysis couldn't be clearer: diamond hands. The argument is that selling into this kind of manufactured fear is just letting them get your shares for cheap. It's giving away a valuable asset at a huge discount. And that leaves us with one last big question to think about. In the long run, who actually wins the EV race? Is it the company that builds the single best car? Or is it the company that controls the gas stations that everybody else needs to use? It's a powerful idea to consider.